Hi, welcome to Forex in 4. I'm Mike Conlon for FX EDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is March 17th, 2010. Happy St. Patrick's Day to all those that celebrate. In years past, I would be out there at the parade getting ready to march, but not this year. We're talking currencies this morning, so not that you should feel honored, but this is what occupies my time these days. Anyway, on to the markets. Today we're talking about disinterested economies. And why do I say that? Well, because of the FOMC meeting that we saw here in the U.S. yesterday, as well as in the overnight session, the Bank of Japan's interest rate policy meeting as well. Okay, in both meetings, interest rates remain the same, which was expected by the market. Okay, however, in the U.S., Bernanke continued with the extended period language. Now, I started to ask myself, well, what is an extended period? Well, it seems like we've been hearing extended period for an extended period, so I'm not certain how much further this is going to go. But when you think about that, you sort of have to think about Japan. Okay, they've had record low interest rates for well over a decade now, as they've been fighting serious deflation in their economy. Not only did they maintain their interest rates at 10 basis points, okay, but the Bank of Japan actually caved into the government and they decided to increase the lending program. They basically doubled it to $222 billion, I think it was. So they're really trying to get some money flowing into the economy to try and pump up deflation. But you know what? That they've done this before and it hasn't worked. Chances are this isn't going to work for them again. So you can really see the similarities between what's going on in the U.S. here and what's happening in Japan. Basic stagflation is what it's all about. So we're going to have to see how this happens. But this morning in the U.S., the PPI numbers came out at -6% versus minus 0.2%. So that just confirms that prices indeed are going down here in the U.S. Now, if you happen to drive a car or like to eat food, that may not necessarily be the case. You may say, whoa, wait a sec, prices are still rising. Well, that very well may be. But there's quite a difference between deflation and commodity inflation, and that's going to be the balance that Bernanke and company is going to have to try and figure out. But on to some good news. Let's talk about employment in the UK. Let's take a quick look here. We're looking at pound dollar. You can see right when this news came out this morning that unemployment claims fell the fastest in over 10 years in the UK. You see a nice little pop there for the pound. We're now back to steadily over, let's take a look at this on the 4-hour chart, over the 150 level there. So it looks like the pound's going to be a little bit of an uptrend. It's good economic news for them going into their elections. People are afraid they're going to have a hung parliament, that the economy's not going to recover, that they're not going to take action on their debt and deficits. But it looks like this is a good sign right now. So whether or not this changes anything in the elections, I don't know yet, but we're going to see. Other than that, we've got risk taking going on. With interest rates so low, people need to park their money somewhere. So as you can see, Aussie's higher, we've got the Kiwi higher, and we've got the loonie higher as well. Now let's take a quick look here at the dollar loonie. As you can see, we're looking at the 4-hour chart. We're really approaching parity here. Let me see if I can expand this a little bit, but we're going to be basically at 1-to-1 with the loonie in no time flat. And if we want to go back, let's look at this on the daily chart. Let's take a quick look at, say, 2-year. Let's look at it on 5-year. Okay, this is kind of a long chart here, but you're going to see that it looks like we're coming right back in. Not only are we going to see parity soon, I think we're going to see something along the lines of right around here, 97.5. Looks like some decent support. So looks like dollar weakness we're going to see, because right now it doesn't look like Bernanke has the conviction nor the economic data to back up rate hikes at this point. So that's going to be a problem. Last one we want to take a look at, let's take a look at the dollar yen here. It's a quick 5-minute chart. Let's look at it on the say 4-hour, and it looks like dollar strengthening against the yen. Again, that's because of the quantitative easing measures that are taken in Japan to try and stimulate the economy. So right now it's hard to say what's going on. We have tremendous monetary expansion in both the U.S. and Japan, but the problem is the velocity of money is not increasing. And what I mean by that is that yes, there's a lot of money, but it's not getting out to people. Okay, people who want to buy homes are having problems getting loans here in the U.S. And I can't say that in this economic environment. I blame banks for not lending to people because everybody's a credit risk now unless you have fantastic credit and a lot of money to put down on a home. So right now housing prices are still going down, and there's no end to this mess in sight. So we're gonna have to see what happens. Add this healthcare package into the mix that's going to increase debt here in the U.S. I know what they're saying about, it's going to drive down costs 10 years from now. Hey, we might not even get to 10 years if people stop lending us money because we're not doing anything about our debt. I mean, you talk about increased tax revenues. I don't know where they think these are going to come from as more and more people are out of work. So it's really going to be a fine line that they're walking here, and we're going to see what happens. Now you're also hearing this U.S.-China currency manipulation story heat up. That could have a major impact going forward. So that's it for today. Happy trading to all, and happy St. Patrick's Day. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.